The fact is that respected trend lines like support and resistance levels and moving averages require multiple tests to break. This allows us to draw another type of structure on the charts called a trading channel. If you can draw both support and resistance lines on the same chart, you'll find the market price often bounces back and forth off the floor and the ceiling several times, forming a trading channel defined by the overhead resistance and below foot support. The overall market direction will determine the slope of the channel and tell us whether it's an ascending channel, a flat channel, or a descending channel. When a test of channel resistance fails to break the ceiling, then the price is sent back down into the channel, and if a test of channel support fails to break the floor, then the price is sent back up into the channel.